Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends, and most importantly, your queries during the show. So please keep commenting on our live feed. We'll have your questions addressed towards the latter half of the show. But before we kickstart, let's see what the global handover looks like. Now, fears of a more hawkish tilt from the Federal Reserve sparking recession see Wall Street correct for a second straight day. The Nasdaq is the top loser once again with a 2% cut. Stocks in the Asia-Pacific trade mixed, while the SGX Nifty signals a flattish start for the Indian market. Brent crude slips below $80 a barrel for the first time since January as concerns over demand outweigh support from the European Union's price caps on Russian oil. Meanwhile, European markets closed lower as global sentiment remains subdued. Back home, how is Nifty Bank positioned ahead of the MPC meet outcome? We also put the spotlight on Jindal Stainless, Craftsman Automation and Ircon International. All right, let's get going and bring on board our first guest on the show. Sanjeev Bhasin from IIFL Securities joins us. Morning, Mr. Bhasin. Thanks for joining in. You know, every market rally has its own set of skeptics. Now, I want to play this time from the other side and ask you a question. Why is it that more stocks are participating in the up move? Nifty Sensex have hit all-time highs. But what a lot of people are noticing is that a lot of stocks, especially from the broader markets, still are lagging behind. Why is that happening?
Yeah, morning, Karunya. So like you rightly pointed out, there are walls of worry and the pessimists or the skeptics have been left behind. If you recall a couple of months back when there was gloom and doom, I was one of the few who stood out and put my neck out. So Karunya, it's simple. You can't run with the hares and hunt with the hound. You have to be invested if you are in India. You cannot have timed it to perfection of buying at 15,000 and selling now. So the undertone is simple. The feeling of miscount is humongous. Indian stock market is, outperformed or an outlier globally. Now, in the context of mid caps and some larger caps, it is always going to be a constant drift. When you see FI inflows, they will definitely be in the large cap stocks. Hence, the mid caps will lag a bit. But look at the darlings of the stock. Who thought PSUs will come back the way they have? So, 3-5 years of underperformance gets done in 1 year. And you've seen stocks double, triple, even more than that in the last 1.5 years. I still think PSUs are in a very sweet spot, though you should take some short-term money off the table. But given the context of the global scenario, India has been an outlier, and we think that any decline now will be an opportunity for the left-out feeling to come in. So I would say these are slight bit of market balances which are going on. Once you see flow of money stabilize, then mid-caps will also start to catch up in the respected sectors and stocks and the earnings.
What we saw up until September 2022 was a broad-based rally, and index and the broader market started to diverge since then. Most stocks saw profit booking while the benchmark indices rose to higher levels, and we saw what happened thereafter. Talk to us about, like you said, broader markets will catch up sooner or later. Where do you see value right now? Is anything, any pocket in the market that's available at attractive price points right now for those who missed out on the heavyweight index up move?
Yeah, so simply put, I think, some of the select mid-cap IT, some of the select mid-cap OEMs and select mortgage companies, again in the mid-cap category. I think they are giving you a very good entry point if you are looking for investments with value. And all three, if I could name a few stocks, so Canfin Home is one of our top picks, where the management has indicated that the second half business would be double the first. It's one of the cheapest stocks, and it's the third largest mortgage lender in the ticket of 15 to 25 lakh. Motherson Sumi is another name where even though they have a Europe reliance, they are now going to be the outsourcer since you see this problem of COVID in China and Euro 1 again being an issue. I think auto outsourcing from India will see Motherson gather steam. Third would be, some of the mid-cap auto stocks or the IT stocks, like a Persistent System or a Coforge, where the management has seen a fair bit of fair weather on the attrition side, and the margins have been very, very stable. So pick and choose your color, or look at some of the mutual funds which have an exposure towards these mid caps. I think you will be rewarded in the slightly medium to longer term.
Do you foresee or do you expect in any way the rally to become narrower because there is more money chasing very few stocks, which obviously also means that actively managed mutual funds could outperform the benchmark and there could be more money moving towards passively managed funds? So do you see the rally sort of getting narrower?
Correct. And it should be like that because, Karunya, you've seen a very, very sharp runoff. Now, fund managers generally tend to be in the large beta stocks so that they can be safety, because when the markets correct, the high beta will correct more than the market. The markets are not cheap. They've climbed all walls of worry. The left out feeling has seen the dumb ETFs who sold aggressively to 15,500 are now outrightly chasing growth on 18.5. I don't see much room of comfort on the valuation basis. Like I said, if not today, you could end the year on a sweet note, but January will be a very difficult month before the budget. And I think that if you have made money, then definitely take some money off. Euro is trading below the dollar for an extended period, and Europe is giving you an exceptional time to go on holiday over there.
Yeah, it seems like a lot of people are of the same view as you, Mr. Bhasin, that if you have made money, maybe you can book part profit and keep some cash aside. Because also, just wanted to understand, how about earnings trajectory? Because we are once again seeing a bounce back in commodity prices. Oil also did see a good rebound. So do we see some earnings pain as well in the next few quarters?
So there are two parts of it. India is an expensive market, Karunya, on the back that equity as an asset class, which was underowned over the last 70 years, is making a strong comeback. This whole wall of money which has come is all the retail flows, and they are here to stay. They are not going to go away in the next 3, 6, 9 months or the next 10 years. That means that valuations will look stretched in certain sectors and certain stocks, and the overall, because of this constant inflow of the SIPs and the mutual fund inflows. Against that backdrop, earnings may have actually hit a crescendo, but we still think that given the environment and given the language of some of the bankers, the mortgage companies and the auto companies, I think the best is yet to come. Now, you can always discount on a price earning basis whether we are above the tide or just at par, but that will be a constant foray. So you cannot but time it. I think if you stay put with good stocks, you will definitely make money in 2023. The volatility will be there before the budget. Plus, Karunya, as we get closer to 2024, there will be election process, freebies and so on. So I would say a large part of the rally may have been done with, but still the left out feeling may see some more froth come on the upside.
Okay, all right. Well, on that note, Mr. Bhasin, thank you so much for joining in and for sharing your thoughts and your observations of the market with us and our viewers. Let's touch base with our next guest, Shivangi Sarza from Motilal Oswal, to talk technicals. Morning, Shivangi. How's the setup looking? Are we also bracing ourselves for a week sort of a trading day, given the kind of handover we've seen?
Good morning, Karunya. Thank you for having me. So we've seen that, Nifty index, we've seen that, after 2 days of slight correction, a slight breather after a rally of the last, 8 to 9 weeks, we've seen that it is sort of, witnessing some sort of profit booking at higher zones. But the good part is that, we can still see buying at support zones. So overall structure is still quite positive. And we could look for a bounce, for an up move towards 881 zones immediately. And the support levels which would be crucial to look out for would be 18,500 levels. So these, levels could be, used for the action point, and any declines can be bought because overall market is quite positive. And even if we see that sector specific, even if heavyweights are taking a little bit of a back foot, they are consolidating, but the other stocks are supporting the entire index and moving quite well. Now, if we look at Bank Nifty had been underperforming from the last 6 to 7 sessions, but now from the last 2 sessions, we've seen good outperformance here as well. And banking stocks are picking up, especially if we talk about the PSU banks. So overall, it is quite positive, and any support could be used as a buying opportunity for the immediate term. So we could look for an up move towards 43,500, 43,750 zones, whereas support would be a crucial support would be 42,750 zones.
Okay, all right. In fact, I wanted to understand how banking stocks are looking, especially given that the RBI's monetary policy meeting will conclude today, and we're expected to see some announcements come by as far as the rate hike is concerned. Thanks for already addressing that, but I want to also flag off some individual stocks in trade that could be in the limelight on back of news flow. Now, the first one I want to pick out is Jindal Stainless. Quant Mutual Fund has picked up about 0.5% stake in the company via open market transactions. Their small cap fund, Quant Mutual Fund Small Cap Fund, has lapped up 26.3 lakh shares at a price of 183 rupees a piece. Now, talk to us about Jindal Stainless. I mean, this is one stock from the broader market we haven't addressed in quite some time, so will be good to get in your view.
Absolutely. So, looking at this chart structure, if we look at, the weekly frame, it has been, moving in the northward direction from the last 22 weeks. It's quite positive. We've seen a, price volume breakout as well. Weekly, we've seen follow-up buying even after the breakup. It's holding well above its 50 exponential moving average on daily frame. So the stock is overall quite positive. We could expect an up move towards 205 levels, which is near its previous day's high, and with a stop loss of around 193.
Okay, all right. Some interesting names have entered into Craftsman Automation as well. White Oak Capital Management, Adia, India Ircon, ICAV. They've all picked close to 3.3% stake in the company combined. The seller in this transaction is Marina 3 Singapore, which has exited completely by hiving off 11.6 lakh shares for a price of 3,200 rupees. Now, the stock right now is at 32.75 levels. Last 1 week has been fairly exciting and encouraging for Craftsman. Talk to us about the way forward. Is it likely to sustain this momentum?
Absolutely. We've seen that this stock has taken support near 3,000 levels, and it is moving quite positively. Thereafter, follow-up buying can be seen, which is positive. Now, the good part is that volumes are increasing steadily in the long side. So the stock is quite positive. We've seen that, it respected its support, and some sort of a consolidation was seen over there. And then the up move started, which signifies that there is, sort of a consistency here. So we could see an up move around, 3,400 levels immediately, and the stop loss would be around 3,210 levels.
Okay, all right. The third stock is from the railway engineering space, Ircon International. Now, railway stocks again, very, very exciting. They've been garnering a lot of interest from the street as well. Now, Ircon has bagged an order worth 122 crore rupees from Sri Lanka government, Sri Lanka Railways to be precise, and the Ministry of Transport there for signalling and telecom systems for both these entities in Sri Lanka. Talk to us about Ircon International. Moneycontrol Pro, for one, is extremely positive on the prospects. We spoke to a few technical experts also in the recent weeks to talk about railway stocks. Most of them have had a very positive view from here on as well. Do you concur?
So we've seen that, this stock is one such stock which we've seen that, from the last 7 weeks, it has been continuously making higher lows. And we've seen that, from 40 odd levels, it has moved to 65 levels. So it is kind of, quite a big rally that we've seen in the last 2 months, and quite remarkable as well. And the way it is holding on to its, current levels, it is quite positive. One could hold in this stock and trail their stop loss. We could expect a upside of around 67 zones, of course, with a stop loss of 63.5.
Okay, fair enough. Let's bring on board some of our viewer comments and queries as well, shall we? The first question is from Parag. He wants your advice on SBI Life. How's the chart looking there?
So looking at all the financial and non-banking financial stocks, overall all the chart structures are looking quite positive. Even if we look at the insurance space, of course, if you look at SBI Life in particular, the stock did see an up move yesterday, but it did not sustain at higher zones, and it gave a closing at it's near its low levels. So now it has to hold above 1300 levels for an up move. So 1300 will be a crucial level to look out for. If it holds above those, then we could expect a up move towards 1340 zones. So this is one level to watch out for.
Okay. How's the stock of BSE looking? We've been getting a few queries this week so far. Ashish is writing to us right now. So if you could tell us, how's BSE looking on the chart?
So looking at BSE, the chart structure is turning positive, and we've seen that there has been support-based buying seen over here. So overall, it is turning, and the buying interest can be seen. So it could act as a positive trigger, and the stock could see around levels of 605 levels.
Okay, all right. Next up is Naveen's query. He's asking about the Bank of India. Now, you've shared your view about overall banking space, but specifically for BOI, how's it looking?
So looking at Bank of India, we've seen a remarkable rally again from the month of October till now, and this stock is one stock which has not stopped. It is unidirectional movement we've seen over here. So the stock is overall quite positive because of the broader view that we are holding on the banking stocks, and we could expect a 94 levels over here with a stop of 88.
Okay, all right. I want to keep it with the public sector space and pull up an Engineers India Limited as well. Vish wants to know what is the view here. Now, good momentum seen, but not as sharp as many of the other PSU peers. Now, what's the likely way forward for EIL?
So looking at the entire PSU space, it is quite positive, and it is going to outperform in the next 2 to 3 months. But looking at Engineers India, we've seen some sort of a correction from the higher zones, some profit taking. Weekly chart structure has actually negated its higher highs, so that is some sort of a concern over here. So it might consolidate. The crucial part here is that its 50 exponential moving average is near 78.2. So this would be a level to watch out for. If it breaks, then we could see more weakness, or else if it holds this, we could see an upside towards 80 levels.
Okay, all right. How about Markson's Pharma? Good momentum seen last few days. Is it likely to continue is what Suresh is asking us.
So, pharma space on a whole, if we see that it has been consolidating, but this particular stock has outperformed the entire space and is moving, well. But again, the sector has to pan out for the stock to move with greater momentum and, rally. So, if it holds, it could, move up to 66 zones. So we could keep a watch, but a very, close stop loss in hand.
Okay, all right. How about AFL? Now, AFL has been trading in a range for the last 3-4 weeks. Anil is asking us your advice on whether to buy or not.
So, looking at AFL, I think, we could wait for a little bit of a more downside for the buying zone to start again. So, we could expect around, 1200, 1190 levels, to start buying this stock again.
Okay. Since we were talking about Ircon, are you equally optimistic about RVNL as well, Rail Vikas Nigam? This is a query coming in from Alex.
So RVNL is quite positive. If we look at the weekly, performance from the month of August till now, it has been quite remarkable. And the rally that we've seen and the follow-up, buying that we've seen is quite positive. So, this stock is also one stock which is going to hold well, and we could see an upside of 75, 76 levels over here, with a crucial support of around, 70.
Okay. Amey is asking us about Poonawalla FinCorp. Why has this one been so sluggish, whereas other, banking and financial names have been upbeat?
So looking at this stock, it is a very high beta stock, and we've seen that weekly chart structure has, not supported. It's not respected from the month of, October. So 2 months, we've seen quite a lot of sluggish behavior in this stock, and it could not hold its crucial support of 305. So that was a trigger point where the stock lost its momentum. So we could wait and watch for this stock again to build momentum.
Okay, all right. Now, Dinesh is asking us about Balkrishna Industries. Now, unlike many of its peers from the auto pack, Balkrishna has been quite an underperformer. Even if we look at the 3-month, 6-month chart, it's been a dull year so far. So talk to us about how it's likely to shape up from here on.
So looking at Balkrishna, it has been a slow performer, but again, it has been consistent from the last 4 weeks. So, support-based buying can be seen. Of course, there is less momentum, but the stock is positive, and we could see an up move towards 2140 levels immediately, and but of course the stock will be moving slower and with a crucial support of around 2025.
Okay. How's the stock of Mahindra Holidays looking? Sushant is sending us a query right now and he wants your advice.
So, looking at the December month and the holidays approaching, of course, these stocks are going to do well. But of course, looking at the chart structure, the weekly frame has, turned positive. We had seen that some sort of a consolidation, some sort of a, triangle pattern formation was seen. But again, over here, we are seeing some sort of a breakout and a good amount of volume addition over here. Now, yesterday, it did not hold at higher zones. So that is one concern. But again, if it holds 290 zones, it could see an up move towards around 301 levels.
Okay. Now, I just want to understand your view on two IT heavyweights. We've been getting a lot of comments on Tech Mahindra and HCL Tech. So if you could tell us how they both stack up against one another.
So, looking at the entire IT space, like yesterday, we've seen that, there was pressure in the entire space. And we've seen that, heavyweights are now kind of, consolidating. We wouldn't say that the stock has turned weak, but again, yes, it is consolidating. Looking at both HCL Tech and Tech Mahindra, if we look at the daily chart structure, the stock is quite positive. In fact, HCL Tech is holding on, well as comparison to Tech Mahindra. So the chart structure is positive, but it is going to consolidate in a range. It is not going to see a sell-off from here.
Okay, all right. Shivangi, how about the stocks that you are tracking? Any names that look attractive to you that you want to highlight to our viewers?
Yes. So, in this kind of a scenario, I'm liking Adani Enterprises. We've seen that the stock has given a consolidation breakout of the last 7 sessions, and weekly it is holding quite well. We've seen that it took support near 3800 zones, and the positive divergence in RSI is going to take the stock higher to around 4200 levels with a stop of 3945. My other pick would be from the cement space. We've seen that good amount of attraction over here and consistent buying over here. We've seen this space is one sector which has consistently moved from the month of August, and all the stocks have been performing very well. So here I'm liking Ambuja Cement, which is holding quite well on its weekly and daily frame. We've seen good amount of open interest addition over here on the long side, and this setup could take the stock higher to 605 levels with a stop loss of around 570.
Okay, so two heavyweights on Shivangi's list, Adani Enterprises and Ambuja Cements. With that, Shivangi, I must thank you for joining in and sharing your views and your readings of the market and host of stocks with us. With that, it's a wrap on the show. Thank you for tuning in.